Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the price steadily increasing over the past few weeks. The forecast price further reinforces this bullish outlook, projecting significant price appreciation in the coming weeks and months. Therefore, an optimal investment strategy would involve entering a long position at the current market price, which is $98,300. Setting a stop loss at $94,300 would protect against significant downside risk. The target price could be set at $107,000, aligning with the forecast price and allowing for substantial profit potential. This strategy capitalizes on the strong bullish momentum and potential for continued price growth in the Bitcoin market. Given the price trends and forecast for Ethereum, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating pattern with a slight upward bias, while the forecast suggests continued growth over the next week. The current price is hovering near the support level of $3,060.31, indicating a potential buying opportunity. The resistance level of $3,535.92 suggests that there is room for further price appreciation. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $3,100, aligning with the current price and the support level. The stop loss should be set at $3,000 to minimize potential losses in case of a sudden price drop. The target price could be set at $3,400, reflecting the forecast and aiming for a reasonable profit margin. This strategy allows for capitalizing on the potential upside while managing risk through a defined stop loss. Based on the provided price information for Ripple, a bullish investment strategy appears promising. The historical prices demonstrate a clear upward trend, culminating in a recent surge to $1.27. The forecast further reinforces this positive outlook, predicting continued growth over the next week, potentially reaching $1.43. This suggests that Ripple is in a strong uptrend and presents a favorable opportunity for investors seeking high returns. Considering this bullish sentiment, a long position in Ripple is recommended. An ideal entry point would be around $1.25, aligning with the forecast and allowing for potential price appreciation. A stop-loss order could be placed at $1.17 to mitigate risk in case of an unexpected price reversal. The target price could be set at $1.40, aiming to capitalize on the predicted price increase while leaving room for potential fluctuations. This strategy allows investors to participate in the anticipated upward momentum of Ripple while managing risk effectively. Given the historical price data and the provided forecast for Solana, a bullish investment strategy appears to be the most suitable approach. The historical prices demonstrate a clear upward trend, with the price consistently rising over the past 2 weeks. The forecast further reinforces this bullish sentiment, projecting continued price increases over the next week. This suggests that Solana is in a strong upward momentum and presents a favorable opportunity for long-term investment. Therefore, I recommend taking a long position in Solana. An ideal entry price would be around $235, aligning with the current price and the historical resistance level. A stop-loss order should be placed at $230 to protect against potential downward movements. The target price should be set at $270, which is in line with the forecast and allows for significant profit potential. This strategy capitalizes on the current bullish trend and aims to capitalize on the expected price appreciation over the coming weeks. Given the price trends and forecast for Cardano, a medium-term investment strategy appears to be the most suitable. The historical prices show a consistent upward trajectory, with the current price hovering near its support level of $0.7754. The forecast indicates continued upward momentum, with prices projected to reach as high as $0.979 in the coming weeks. This suggests a bullish outlook for Cardano in the medium term. Therefore, a long position is advisable to capitalize on the potential for price appreciation. An entry price of $0.800 could be considered, allowing you to buy in at a slightly discounted price relative to the forecast. A stop-loss order should be placed at $0.780 to limit potential losses if the price drops unexpectedly. The target price could be set at $0.950, aiming to capture a significant portion of the projected price increase. This strategy balances risk and reward, allowing for potential profits while minimizing the downside. Based on the provided price information for Coin, a bullish investment strategy appears suitable. The historical price data reveals a generally upward trend, with recent fluctuations around the $3.60 to $3.78 range. The forecast price suggests continued upward momentum, projecting prices to reach $4.01 within the next week. This positive outlook, coupled with the fact that the current price sits near the support level of $3.6078, indicates a favorable entry point for a long position. Therefore, a strategy focused on a long-term investment perspective is recommended. An entry price of $3.65, slightly above the support level, would allow for a buffer against immediate price fluctuations. A stop-loss order placed at $3.55 would protect against significant downside risk. The target price should be set at $4, aligning with the highest projected price in the forecast, allowing for a substantial profit margin while leaving room for potential price appreciation beyond the forecast period. Given the price trends and forecast for Filecoin, an aggressive investment strategy would focus on a short-term approach to capitalize on the upward momentum. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the forecast and support level of $4.415. The resistance is at $4.678, indicating potential for further price increases. In this scenario, a long position is advisable to take advantage of the potential for a price increase towards the resistance level. For an aggressive short-term investment strategy, an entry price of $4.45 would be ideal, aligning with the forecasted price and providing room for growth. The stop-loss should be set at $4.35 to protect against any unexpected price corrections. The target price should be set at $4.65, allowing you to take profits before the market reaches the resistance level. This strategy aims to capture a significant portion of the predicted price increase while minimizing risk through a well-defined stop-loss order. Based on the provided data for Theta network, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. While the forecast suggests a continued upward trajectory, reaching prices around $1.86 over the next week, it's important to acknowledge the potential for short-term volatility. Therefore, a medium-term approach allows for capitalizing on the overall upward trend while mitigating the risks associated with short-term fluctuations. An ideal entry point for this strategy would be around $1.60, providing a buffer below the current price and aligning with the support price of $1.554. A stop-loss order should be placed at $1.50 to protect against significant downside movements. The target price for this investment could be set at $1.80, capturing a potential profit of approximately 12.5% while staying within the projected price range. This strategy balances risk and reward, allowing for potential gains while minimizing the impact of short-term market fluctuations. Given the provided price history and forecast for Dogwifhat, a short-term investment strategy appears most suitable. The historical price data reveals a volatile trend with fluctuations above and below the resistance level of $3.622. While the forecast predicts a slight upward movement, the overall price action suggests potential for short-term corrections. Therefore, a short position is recommended with an entry price around $3.45, near the current market price. The stop-loss should be placed at $3.60, slightly above the resistance level, to limit potential losses. The target price is set at $3.05, aligning with the support level, aiming to capture a potential price decline. This strategy capitalizes on the volatile nature of Dogwifhat and seeks to profit from short-term price fluctuations. Given the price trends and forecast for Stellar, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, with recent price spikes reaching $0.267. The forecast indicates continued growth, suggesting Stellar could potentially reach $0.289 within the next week. While the support price sits at $0.2541, providing a safety net, the resistance at $0.2822 presents a target for profit-taking. Therefore, a long position is recommended for a medium-term investment strategy. An entry price around $0.255, just above the support level, allows for capturing potential upside while minimizing risk. A stop-loss order should be placed at $0.250 to protect against unexpected price drops. The target price can be set at $0.280, aiming to capture a significant portion of the forecasted price increase. This strategy allows for capitalizing on the bullish momentum of Stellar while managing risk effectively. Given the price trends and forecast for Starknet, a short-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern, with recent peaks around $0.549 and $0.506. While the forecast suggests a potential upward movement towards $0.526, it's important to note that the price action hasn't consistently broken above the resistance level of $0.5058. This suggests a potential for consolidation or a pullback in the near future. Therefore, a short position could be considered to capitalize on a potential price decline. For this strategy, an entry price around $0.495 could be appropriate, allowing for some room below the current price and aligning with the potential for a pullback. The stop loss should be set at $0.508, slightly above the recent highs and the resistance level, to protect against an unexpected upward move. The target price could be set at $0.465, aiming to capture a potential decline towards the support level of $0.449. This strategy focuses on a short-term opportunity, aiming to profit from a potential retracement in the price of Starknet. Based on the provided price information for PENDLE, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend, but the forecast suggests a slight upward movement in the coming week. Considering the support price at $4.928 and the resistance price at $5.924, entering a long position might be risky due to the potential for price fluctuations. Therefore, a short-term strategy focusing on a long position with a conservative approach is recommended. The entry price could be around $5.20, slightly above the recent historical lows and below the immediate resistance level. The stop loss should be set at $5.05 to limit potential losses if the price drops below the support level. The target price could be set at $5.50, aiming to capitalize on the potential upward movement predicted in the forecast while staying within a reasonable risk-reward ratio. This strategy allows for potential profit while mitigating the risk associated with the volatile nature of the cryptocurrency market. Given the price trends and forecast for Render, a medium-term investment strategy appears to be the most suitable. The historical price data shows a general upward trend, although with some fluctuations. The forecast suggests continued growth in the coming weeks, reaching prices above the current resistance level. This indicates a bullish outlook in the medium term. A long position is recommended to capitalize on the anticipated price increase. An entry price around $7.34, near the current price, allows you to enter the market with minimal delay. The stop loss should be set at $7.185, the support price, to limit potential losses. The target price should be set at $7.878, the resistance level, aiming to capture a significant portion of the anticipated price appreciation. This strategy balances risk and reward, allowing you to participate in the potential upside of Render while managing potential downside. Given the price trends and forecast for VeChain, a medium-term investment strategy appears promising. The historical prices demonstrate a fluctuating pattern with an overall upward trend. The current price is relatively close to its support level of $0.02869, suggesting a potential buying opportunity. The forecast indicates continued upward movement, with prices potentially reaching $0.0354 in the coming weeks. This suggests that VeChain could experience a moderate price increase in the medium term. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $0.029, allowing you to enter the market near the support level while leaving room for potential price appreciation. The stop loss should be placed at $0.028, protecting your investment from significant downside risks. The target price could be set at $0.034, aiming to capture a substantial portion of the forecasted price increase. This strategy balances risk and reward, allowing you to capitalize on the potential upside of VeChain while mitigating potential losses. Based on the provided Binance Coin price information, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight downward bias in the recent past. However, the forecast indicates an upward movement over the next week, suggesting a potential for recovery. The support price of $606.30 acts as a floor, while the resistance price of $622.75 represents a potential ceiling. Considering these factors, a long position would be advisable. An entry price around $615, near the recent lows but above the support level, would allow for potential upside while minimizing risk. A stop loss at $606.30, below the support price, would protect against unexpected downward movements. The target price could be set at $622.75, aiming to capture the potential upward momentum and reach the resistance level. This medium-term approach allows for capitalizing on the anticipated price increase while managing risk effectively. Based on the provided price information for Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history demonstrates a fluctuating trend with a slight downward bias. While the forecast suggests a continued downward movement, it remains relatively close to the current price levels. The support price at $0.1398 acts as a significant barrier, indicating potential buying pressure should the price drop further. Therefore, a long position is recommended, aiming to capitalize on a potential rebound from the support level. An entry price around $0.145 would allow for a margin of safety, while a stop-loss order placed at $0.1398 would mitigate potential losses. The target price could be set at 16 cents, aligning with the recent resistance level and representing a reasonable profit target for a medium-term investment. This strategy acknowledges the current bearish sentiment while positioning for a potential recovery in the medium term. Based on the provided price information for Worldcoin, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend, with recent movements suggesting a potential consolidation phase. The forecast indicates a slight upward movement, but the range remains relatively narrow. This suggests a period of sideways movement with limited potential for significant gains in either direction. Given this outlook, a long position is recommended, aiming to capitalize on the potential for a gradual upward trend. An entry price around $2.25, slightly above the current price and within the forecast range, would be prudent. A stop-loss order should be placed at $2.18 to mitigate potential downside risks, while a target price of $2.35 allows for a reasonable profit margin if the upward trend continues. This strategy balances risk and reward, aiming for a steady, moderate return over the medium term. Based on the provided Avalanche data, a short-term bullish strategy appears promising. The historical price demonstrates a generally upward trend, with recent fluctuations around the $33 to $35 range. The forecast predicts continued upward movement, reaching $36 within the next week. This suggests potential for capitalizing on the short-term price increase. Considering the support price at $34.91 and resistance at $35.98, an entry price around $34.95 would allow for a favorable risk-reward ratio. A stop-loss order placed below the support level at $34.80 would mitigate potential losses. The target price could be set at $35.80, aiming to capture a significant portion of the projected price increase. This strategy capitalizes on the positive momentum indicated by both historical data and the forecast, while incorporating risk management measures to protect against potential market reversals. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a recent period of consolidation with slight downward pressure, while the forecast suggests a modest upward movement. The support price at $1.0461 indicates a potential floor for the price, while the resistance at $1.1889 represents an immediate hurdle for further upward gains. Therefore, a long position is recommended, aiming to buy near the current price around $1.13 and target a profit at $1.18, slightly below the resistance level. The stop loss should be placed at $1.06 to limit potential losses if the price drops below the support level. This strategy aims to capture a short-term upward move while managing risk effectively. Based on the provided EOS price history and forecast, a medium-term bullish investment strategy is recommended. The historical price data shows a general upward trend, with recent fluctuations around the 60-cent support level. The forecast predicts further price increases, suggesting potential for continued growth in the coming weeks. Considering this outlook, a long position on EOS is advisable. An entry price around $0.625 could be suitable, allowing you to buy in at a relatively attractive price point while the price is consolidating near support. A stop-loss order placed at $0.6163, the support price, would help minimize potential losses if the price unexpectedly drops. The target price could be set at 70 cents, aligning with the forecast and offering a reasonable profit margin. This medium-term approach allows you to capitalize on the anticipated upward momentum while managing risk through a well-defined stop-loss. TRON shows a 2-week upward trend with a forecast suggesting continued growth. The current price is hovering near the support level of $0.1947, indicating a potential buying opportunity. Given the positive price momentum and the forecast suggesting prices could reach $0.207 within the next week, a long position seems suitable. To implement this strategy, an entry price of $0.196 would allow you to buy in near the support level while minimizing risk. A stop-loss order should be placed at $0.1947 to protect against any unexpected downward movement. The target price could be set at $0.205, aiming to capture a portion of the anticipated price increase. This strategy focuses on a short to medium-term investment horizon, capitalizing on the immediate upward trend in TRON while remaining mindful of potential market fluctuations. Given the price trends and forecast for SE, a short-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating pattern with a slight upward bias, but the forecast indicates a potential pullback in the coming week. The support price of $0.4593 provides a potential floor for the price, while the resistance level of $0.4927 suggests a ceiling for the upward movement. Therefore, a short position is recommended to capitalize on this anticipated price decline. An entry price of $0.483, aligning with the forecasted price, would be ideal. To manage risk, a stop-loss order should be placed at $0.4927, just above the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.4593, the support level, aiming to capture profits from the anticipated price drop. This strategy allows for a short-term play on the potential price correction in SE, balancing risk and reward within a limited timeframe. Based on the provided Shiba Inu price information, a medium-term investment strategy appears most suitable. The historical prices demonstrate a slight downward trend, but the forecast suggests a potential upward movement in the coming week. This indicates a period of consolidation, followed by a possible bullish breakout. Entering a long position at the current price, close to the support level of $0.0000238, allows for potential gains if the forecast proves accurate. A stop loss should be placed slightly below the support level, around $0.0000235, to minimize potential losses. The target price could be set at $0.0000256, aligning with the forecast's highest projected price for the week. This strategy capitalizes on the potential for a short-term upward movement while mitigating risk with a well-defined stop loss. The medium-term perspective allows for patience and observation as the market develops, potentially leading to further gains if the bullish trend continues beyond the initial week. Given the price trends and forecast for Dogecoin, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a generally upward trajectory, with recent fluctuations suggesting a consolidation phase. The forecast indicates continued growth, projecting prices to reach above the current resistance level. While the support price provides a safety net, the target price should be set above the forecast to maximize potential returns. A suitable entry point for this strategy would be around 38 cents, allowing you to buy in near the current price while anticipating further upward movement. The stop loss should be strategically placed below the recent support level, around 36 cents, to minimize potential losses. The target price could be set at 46 cents, taking advantage of the projected price increase and aligning with the resistance level. This approach capitalizes on the expected bullish momentum while managing risk through a well-defined stop loss. Based on the provided information about Hooked Protocol, a short-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend, with recent fluctuations suggesting potential volatility. The forecast price indicates a slight upward movement, but the short-term nature of the forecast suggests potential for both gains and losses. Considering the support price of $0.3857 and the resistance price of $0.4376, a long position might be risky due to the proximity of the current price to the resistance level. Therefore, a short-term short position is recommended. An entry price of $0.421, aligning with the recent price action and slightly above the forecast, would be appropriate. The stop loss should be set at $0.4376, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.3857, the support level, aiming to capture potential downward momentum. This strategy allows for participation in the potential short-term price decline while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Aevo, a medium-term investment strategy seems most appropriate. The historical price data shows a fluctuating pattern with a recent upward trend, supported by the forecast indicating continued growth. While the support price of $0.345 provides a safety net, the resistance at $0.391 suggests potential for further price appreciation. Therefore, a long position is recommended. An entry price of $0.353 aligns with the current price and recent forecast, while a stop loss at $0.344 offers protection against sudden price drops. The target price should be set at $0.391, aiming to capitalize on the potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in a medium-term investment horizon. Given the historical price data and the one-week forecast for Litecoin, a short-term investment strategy appears most suitable. The historical prices show a fluctuating trend, but the recent price action suggests a potential downward movement. The forecast price also indicates a downward trajectory, with the predicted price falling below the current level. This bearish outlook, coupled with the historical price fluctuations, suggests an opportunity to capitalize on the potential price decline. Therefore, an investment strategy focused on a short position in Litecoin for the short term is recommended. The entry price should be set at $0.0074, slightly above the current price to allow for some initial price movement. The stop loss should be placed at $0.00757, the recent high point, to limit potential losses if the price unexpectedly moves upwards. The target price should be set at $0.0073, slightly below the support price, aiming to capture a portion of the anticipated price decline. Based on the provided price history and forecast for Suncoin, a short-term investment strategy appears most suitable. The historical price data shows a period of consolidation and minor fluctuations, with the recent price hovering around $0.0209. The forecast indicates a potential for modest upward movement in the coming week, reaching around $0.0216. However, the price is currently close to the resistance level of $0.02165, suggesting that further upside might be limited. Considering this context, a short-term long position could be considered. An entry price of $0.0209 aligns with the current market price and allows for potential profit if the price rises towards the forecast of $0.0216. To manage risk, a stop-loss order could be placed at $0.0205, slightly below the recent support level. The target price could be set at $0.0215, aiming to capture a portion of the potential upward movement while leaving room for further price appreciation. This strategy capitalizes on the short-term bullish sentiment while mitigating potential downside risk. Given the price trends and forecast for Pepe, a short-term investment strategy focusing on a long position seems most suitable. The historical prices show a generally upward trajectory, with the current price hovering near the support level. The forecast indicates a slight increase in price over the next week, suggesting potential for further gains. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price of approximately $0.00000206. The stop-loss should be set slightly below the recent low of $0.0000187 to protect against sudden price drops. The target price could be set at $0.000212, aligning with the recent resistance level, allowing for potential profit capture before encountering significant resistance. This strategy capitalizes on the potential for continued upward momentum in Pepe within the short term. Given the provided price information for Toncoin, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with periods of both growth and decline. While the forecast suggests a slight upward movement in the coming week, the price remains close to the support level of $5.501. This indicates a potential for consolidation or a sideways movement before a more significant price change. Therefore, a long position is recommended. An entry price around $5.30 would allow you to capitalize on the potential upward momentum while minimizing risk. The stop-loss should be set at $5.25 to protect against a sudden drop below the support level. The target price could be set at $5.65, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating losses in case the price moves against the prediction. Given the price trends and forecast for Bitcoin Cash, an aggressive investment strategy would focus on a long-term approach to capitalize on the anticipated upward momentum. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near its forecast and close to the support level of $446.20. The resistance is at $517.90, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. To execute this strategy, an entry price of $460 would be ideal, aligning with the forecasted price and providing a buffer above the support level. The stop-loss should be set at $447 to protect against any unexpected price pullbacks. The target price should be set at $510, allowing for a substantial profit margin before reaching the resistance level. This strategy aims to capture a significant portion of the anticipated upward movement in Bitcoin Cash over the long term. Based on the provided information for Chainlink, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a slight upward bias. While the forecast predicts a consistent rise in price over the next week, reaching a peak around $15, the support and resistance levels suggest a potential consolidation period before further upward movement. Therefore, a long position is recommended for Chainlink. A strategic entry price could be around $13.80, allowing you to buy in during a potential dip before the price rises towards the forecast. A stop loss at $13, slightly below the recent lows, would protect against unexpected downturns. The target price should be set at $15.20, aiming to capitalize on the predicted price increase and reach the resistance level. This approach allows for a medium-term hold, potentially benefiting from Chainlink's upward momentum while mitigating risk through a well-defined stop loss. Based on the provided data for Polkadot, a bullish investment strategy appears most suitable. The historical price data reveals an overall upward trend, with recent fluctuations settling near the support price of $5.701. The forecast price suggests continued growth, reaching up to $6.39 in the coming week. This positive momentum, coupled with the relatively low price compared to the resistance level of $5.992, indicates a favorable opportunity for long-term investment. Therefore, I recommend a long position in Polkadot. A strategic entry price could be around $5.75, slightly above the support price, allowing for some room for price adjustment. The stop loss should be set at $5.60 to minimize potential losses in case of an unexpected market downturn. The target price could be set at $6.20, aiming to capitalize on the forecasted price increase while leaving room for potential market fluctuations. This long-term strategy allows for potential growth while managing risk effectively. Near Protocol shows a recent upward trend with a positive forecast. The historical price data reveals a consistent upward movement, with the current price hovering near the support level. The forecast suggests that Near Protocol could continue its upward trajectory, potentially reaching the resistance level. Considering these factors, a long position seems like a suitable strategy to capitalize on the anticipated price increase. An aggressive short-term investment strategy could involve entering a long position at $5.75, aligning with the forecast. The stop loss should be set at $5.575, the support price, to minimize potential losses. The target price could be set at $6.018, the resistance level, aiming to maximize profits from the anticipated price increase. This strategy allows you to participate in the potential upward movement of Near Protocol while managing risk effectively. Given the price trends and forecast for stacks, a medium-term investment strategy appears to be most suitable. The historical prices show a fluctuating trend, with recent dips followed by recoveries. The forecast suggests a slight upward trend in the coming week, indicating potential for growth. The support price of $1.865 acts as a safety net, while the resistance level of $2 provides a target for potential gains. Therefore, a long position is recommended for stacks. The entry price should be around $1.88, slightly above the recent low and below the immediate resistance. The stop loss can be set at $1.86, just below the support price, to limit potential losses. The target price should be around $1.97, aligning with the forecast and offering a reasonable profit margin. This strategy aims to capitalize on the potential upward momentum while managing risk effectively. Based on the provided Aptos price information, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight upward bias. The forecast indicates a stable period around $12, suggesting a consolidation phase. Given this, entering a long position at the current price of $11.74 could be a prudent move. A stop-loss order should be placed at $11.50 to limit potential losses if the price drops unexpectedly. The target price could be set at $12.50, aiming to capitalize on the potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Holding this position for a period of 2 to 3 weeks could allow for a significant price appreciation if the forecast holds true. Based on the provided Litecoin price history and forecast, a medium-term investment strategy appears promising. The historical price data shows an overall upward trend, with recent fluctuations around the $80 to $90 range. The forecast predicts continued upward movement, reaching around $90 to $93 in the coming week. This suggests a bullish outlook for Litecoin in the short to medium term. Considering this, a long position is recommended. An ideal entry price would be around $86, slightly below the current price and the recent resistance level. The stop loss should be placed at $83.61, the identified support price, to minimize potential losses. The target price could be set at $95.97, the resistance level, aiming to capitalize on the potential for a price increase. This strategy allows for potential profit while managing risk within a medium-term timeframe, aligning with the projected upward price movement. Based on the provided Uniswap price information, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend, but the recent 2-week price change suggests a slight downward movement. Furthermore, the forecast price indicates a continuation of this downward trend over the next week. Given this bearish outlook, a short position on Uniswap could potentially yield profits. To implement this strategy, an entry price of $9 would be appropriate, aligning with the recent price fluctuations and allowing for a buffer against potential upward spikes. A stop-loss order should be placed at $9.25 to minimize potential losses if the price unexpectedly rises. The target price would be set at $8.70, aiming to capitalize on the anticipated price decline while leaving room for a slight correction. This strategy prioritizes short-term gains by capitalizing on the current market sentiment and the forecast price trend. Given the price trends and forecast for Bittensor, a short-term investment strategy appears to be the most suitable. The historical prices show a volatile but generally sideways movement, with the current price hovering around the support level. The forecast suggests a slight upward movement over the next week, but it's not a strong bullish signal. Therefore, a long position might not be the most profitable choice in this scenario. Considering the price information, an aggressive short-term investment strategy could involve entering a short position at $518, the current price. The stop loss should be set at $544.30, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $480.70, the support level, aiming to profit from a potential price decline. This strategy capitalizes on the sideways price action and the forecast's limited upward momentum, aiming for a quick profit within a short time frame. The current price trend of Internet Computer shows a fluctuating pattern with a slight upward bias. While the historical prices demonstrate a range-bound movement, the forecast suggests a continued upward trajectory over the next week. The support price at $8.171 acts as a floor, preventing significant downward movement, while the resistance at $9.422 presents a potential ceiling for price appreciation. Considering these factors, an investment strategy focusing on a long position appears suitable. Given the forecast and support/resistance levels, a suitable entry price for a long position would be around $8.90, close to the current price, but below the resistance level. A stop-loss order could be placed at $8.18 to protect against potential downside risks, while a target price of $9.40 offers a reasonable profit margin, aiming to capitalize on the predicted upward movement. This strategy adopts a medium-term perspective, allowing for potential price appreciation within the next week or two. Based on the provided Artificial Superintelligence Alliance price data and forecast, a cautious investment strategy would favor a short-term perspective. The 2-week price history exhibits volatility, with recent fluctuations suggesting a potential for short-term price movements. The forecast indicates a slight downward trend in the coming week, aligning with the recent price dip. Therefore, a short position on Artificial Superintelligence Alliance appears to be a more suitable strategy for the short term. An entry price of $1.29, aligned with the forecast, would allow for potential profits as the price potentially declines. To manage risk, a stop-loss order should be placed at $1.32, slightly above the entry price, to limit potential losses. The target price could be set at $1.228, the support level, aiming to capture a significant portion of the potential downside movement. This strategy prioritizes risk management and capitalizes on the anticipated short-term price decline. Given the price trends and forecast for Optimism, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price hovering near the support level of $2.057 and the forecast suggesting further increases towards $2.04. The resistance level sits at $2.262, indicating that there is still room for upward movement. However, the recent price fluctuations suggest some consolidation before a potential breakout. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $1.85 would allow you to buy in at a relatively attractive price, while the stop loss should be set at $1.75 to protect against any unexpected price drops. The target price should be set at $2.15, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy balances risk and reward, allowing you to participate in the potential upside of Optimism while mitigating potential losses. Given the price trends and forecast for Ethereum Classic, a moderately aggressive investment strategy would focus on a short-term approach to take advantage of the relatively stable upward momentum. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level of $25.63. The resistance is at $28.63, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price for this strategy would be $26, aligning with the forecasted price and providing a buffer above the support level. A stop loss at $25.63 would protect against any unexpected price reversal, while a target price of $28.30 would allow for a healthy profit margin before reaching the resistance level. This strategy balances risk and reward, aiming to capitalize on the positive price momentum while mitigating potential losses. Based on the provided Ethereum name service price history, forecast, and support/resistance levels, a short-term investment strategy appears to be most suitable. The 2-week price change shows a slight downward trend, and the forecast indicates a continued consolidation around $18. The support price at $17.32 suggests a potential floor for the price, while the resistance at $19.42 indicates a ceiling for upward movement. Considering these factors, an investment strategy involving a short position is recommended. A suitable entry price would be $18.50, slightly above the current price and close to the resistance level. The stop loss should be placed at $19, above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $17.50, aiming to capture a potential downward move towards the support level. This strategy capitalizes on the perceived limited upside potential and the possibility of a short-term price correction. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $0.2002, while the resistance is at $0.2318. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $0.225, close to the current price. The stop loss should be set at $0.2318, the resistance level, to protect against any unexpected price recovery. The target price should be set at $0.2002, the support level, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the potential for a short-term price decline in Solana name service. Given the current price trends and forecast for Aave, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating pattern with recent downward movements. The forecast also suggests a continuation of this downward trend, with prices potentially dipping below the current level. Considering this bearish outlook, taking a short position would be the most logical approach to capitalize on the anticipated decline. An ideal entry price for a short position would be around $169, aligning with the recent price action and the forecasted price range. To manage risk, a stop-loss order should be placed at $172, slightly above the entry price, to limit potential losses in case the price unexpectedly rebounds. The target price for this short position could be set at $160, aiming to capture a reasonable profit before the price potentially finds support at the lower end of the forecast range. Based on the provided injective price history and forecast, a medium-term investment strategy appears most suitable. The price has shown a fluctuating trend over the past 2 weeks, with recent dips followed by slight recoveries. The forecast suggests a continued upward movement, with prices potentially reaching $26. This indicates a potential for capital appreciation in the medium term. A conservative approach would involve entering a long position at $24.50, aligning with the recent price action and providing a buffer below the current market price. The stop loss should be set at $23.50, safeguarding against a potential sharp decline. The target price could be set at $25.80, aiming to capture a significant portion of the potential upside while remaining below the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided Polygon price information, a bullish investment strategy appears promising. The historical price data shows an upward trend, with recent fluctuations around the 40 cents mark. The forecast prices further suggest continued growth, reaching up to 48 cents within the next week. The support price of $0.4276 acts as a solid foundation, while the resistance price of $0.4585 indicates a potential ceiling for the immediate future. Therefore, a long-term investment strategy is recommended, capitalizing on the projected upward momentum. An entry price around 43 cents, slightly below the current price, allows for a margin of safety. The stop loss should be placed at $0.4276, aligning with the support price to minimize potential losses. The target price can be set at 47 cents, aiming to capture a significant portion of the forecasted price increase. This strategy aligns with the overall bullish outlook for Polygon and seeks to profit from its sustained growth potential.